right, let's do it. All right. Well, if you're here today, you're either actively raising capital or you're thinking about launching your own capital raising business, or maybe you're just trying to figure out what the next evolution of the real estate industry or the capital raising industry looks like. And, but if you've been in it, then we're coming off a few tough years and we're still in it. Especially for the real estate market, interest rates are still a challenge and investors are skeptical at best. A lot of the stuff, the old playbooks, they just don't work anymore. But the capital raisers who are willing to adapt and to build now, who are thinking about how to build smarter and more compliant and future-proof structures, they're going to crush it over the next cycle when this thing starts to take off. And just keep that in mind that that's what we have to look forward to. The real estate market is cyclical, like we all know, and there's no doubt about it. We are in a down market, but this market will turn and accelerate, and that is a fact. It will happen. So we've got to hold on tight. We've got to build smart, and we've got to be ready for it when it happens because the people that wait are going to be too late. They're the people that got into this cycle in 2022 or 2023 when it was too late to capitalize on it. So if you're still trying to figure things out, when that happens, you're just going to get left behind. So we're going to talk about the biggest industry shifts you're seeing right now that you need to know, the tools and strategies that you can use to raise more capital faster. And because I'm a securities attorney, some SEC and law changes that you must be aware of. Sound good? All right, let's get it. So quick legal reminder here. This is for educational purposes only. Tribevest specifically is not a law firm, and we don't give legal, tax, or investment advice. And I am an attorney, but I'm not your attorney, so please seek your own counsel. All right, first, to get into my world, I set up this QR code. It's really a gateway and a ton of free tools and courses and things I've created over the course of many years. And it's free now. I used to sell it for a lot of money, but now it's free. Giving this stuff away. And if we haven't met, here's the 10-second bio. I've closed billions in real estate transactions as an attorney, a capital raiser, and a deal maker. I've worked in big law, founded companies, and have my own boutique securities law firm, Raise Law. And most importantly for this presentation, I'm a fund manager, I'm a syndicator, and an operator. So I'm on the business side as well. And that perspective is why I'm here today, because I know exactly how this game works. I've been in it for a long time. I know where people get stuck, and I know how to set yourself up to win. So I understand your problems because I have them too. Here's what we're going to cover today, so you know exactly where we're headed. First, we're going to talk about the big industry shifts that are happening in 2025 and into 2026. What's changing in capital raising, where the opportunities are, what's no longer working, what is working. Second, we'll dive into fund-to-fund model, why it's exploding right now and has been for the last couple of years, and why I believe it's the future of compliant, scalable capital raising. Third, I've got a special announcement for you. We're rolling something out that's brand new, and it's going to completely change the way that lead sponsors and fund managers work together. And last, we'll wrap up with exactly how to future-proof your capital raising business, so you're not just reacting to the market, but staying ahead of it. And then, of course, we'll open it up to Q&A at the end, and I'll answer any specific questions you might have. All right, let's start with the big picture. So first, distressed assets. You guys are seeing them out there. We're starting to see a wave of distressed real estate assets that have hit the market. Some of these are due to debt maturities, some due to bad underwriting in 2021 and 2022, and really before that. And some simply just because operators can't handle today's higher interest rates, and they were locked into an adjustable rate loan, those sorts of things. But this creates huge opportunity for well-capitalized sponsors or sponsors and fund managers that are able to raise capital. So if you're ready with capital, this is a great time to buy deals at a discount. I mean, you're seeing, not just 5 to 10% discounts, but up to 40% discounts on some of this real estate from the peak. Now the peak might have been probably too high, but still you're seeing massive discounts, and it's a once in a cycle opportunity. Second, you're seeing SEC and regulatory shifts with the new administration getting into the swing of things. We're seeing policies shift towards pro-capitalism. Whether you like them or not, doesn't matter. Take advantage of this time and go make some money while things are looser. we're watching proposed rule changes that could expand the pool of investors dramatically. So and including giving retirement plans an easier access to alternative investments, which will be huge, and it already is. So that means more money will be able to flow into your deals, and you'll be set up to capture it. And third, the death of the co-GP model, which we've talked about in the past, but I think that it's continuing to happen as operators get smarter and smarter and have alternatives such as Tribevest. So for years, a lot of capital raisers have just relied on that co-GP strategy, and lead sponsors have traded a slice of their GP for capital, but that model is and has been under pressure. It's risky from a compliance standpoint, creates messy cap tables, and it can cost you control of your deal. So the good news is new solutions are emerging that let you raise more capital faster in a way that keeps you compliant and really in control. And that's what we're going to unpack today. All right, let me show you a couple headlines here and why this all matters. So you've probably seen headlines like this. New real estate fund hauls in billions. And it feels like these big players like Brookfield and Blackstone, they're just always getting bigger. And they are. They're using systems, structures, processes that you can too, or at least you can mimic, and just on a smaller and more nimble scale. And the point is that the capital is out there. These folks are raising billions and billions and billions of dollars. So it's out there. It's a sleeping giant. And the question is, do you have the right setup and the right story to capture it? And, here's where things get exciting for you, because just think about this. As capital raisers, investors don't just need a great deal. I mean, you've heard this before that, you can't just find a great deal and just expect to raise millions of dollars. It just doesn't happen. You have to have a great story behind it. You have to have relationships. And storytelling in particular is just one of the most powerful tools that we have to inspire action. And especially when that action is investing $50,000 or $500,000 with someone that maybe you have a relationship with and maybe you don't. So it has to really inspire you. You have to tell a story. So when you're buying properties at a 20 to 40% discount from peak pricing, like we spoke about earlier, that's your story. Sell that. That's your story. That's what investors want to hear. They want to feel like they're getting a deal, because they actually are. So LPs don't just invest in numbers, they invest in a narrative. And right now you have the opportunity to tell that once in a cycle story. We're acquiring assets that we're selling for $50 million 2 years ago, and we're buying them today for 35 million. That's great. Like, I hear that, I'm like, really? Is that true? Let me look into it a little bit further. Let me explore this deal. Might be something I want to invest in. So you have that opportunity right now to tell that story. Creates urgency. It builds confidence. It helps your investors feel like they're stepping into an opportunity that may not come around again for another decade, or if you believe in the 7-year cycle, 7 years, whatever it might be. This last one was twice that, but you never know. And this is where your job as a capital raiser really shifts from simply presenting numbers and projections to painting a vivid picture and telling a story, showing investors why now's the time to invest and why this particular deal is the right one and why you're the right sponsor to execute. What do we got here? All right, the next thing I want to cover here are the proposed rule changes and kind of semi-rule changes already. They'll really be coming down the pipeline in the future, but the government has really hinted at these things happening, and they will. I anticipate that they will, at least. Regardless of your view on the current administration, they are pro-capitalism, they are pro-real estate, and their policy promotes money movement. So, and if these rules are finalized, it can unlock billions of dollars in new capital that was previously sitting on the sidelines. So the key takeaway is that opportunity is about to get bigger. If you're ready with the right legal structure and the right systems and processes and people in place, then you can capture more capital more quickly from more investors. Here's one. So the SEC and Congress are looking to expand the accredited investor definition. You may have heard about this because they tried to do this. When was that? That might have been like pre-COVID. So that was probably at least 5 years ago. And this could be huge for capital raisers. Right now, you guys know this, but typical investors have to hit 200K in income or $1 million in net worth. And if they don't, they're locked out of a lot of private offerings, particularly 506C. Obviously, there's some exceptions to that, but that's the general rule. And these new rules would let people qualify, however, based on knowledge and experience. So maybe licenses, which there are already some exceptions for that, Series 65, 66, things like that, Series 7. Education, and the really interesting thing is the short exam. So you may be able to take an exam to be certified as accredited, and then you can therefore invest. And there's a lot of folks out there that should, in my opinion, be allowed to invest in these deals and have access to it because they're educated, they're aware of the risks and the responsibilities that come along with investing a lot of money in these deals. And if they want to take that risk, the government shouldn't hold them back to doing that. And this exam would give them the opportunity to do that. So the bottom line is this will open the door for more investors and more capital for your deals. And just generally, it's just a loosening on the restrictions, and you'll see more on this in the next coming year or so. Another one. So you've seen the White House is pushing for access to alternative investments for 401k investors. And this is really a general kind of loosening on these restrictions. You're already allowed to kind of roll those investment funds over to an SDIRA or a solo 401k and invest. This is really talking about the more traditional ones that you might not have to roll over. And there was an executive order that was signed directing the Department of Labor and the SEC to make it easier for these retirement plans to include alternative investments like private real estate. So again, there's not a lot of details around that yet. It's just an executive order telling these departments to make it easier for them to get access, or for 401ks to get access to these alternative investments. So this will obviously allow you and your fund managers access to lots more capable investors and more capital. All right, check this out. We love to see graphs that are up and to the right. Maybe you never believe those right off the bat. You got to dig a little deeper, but we like to see them. So fundamentally here, though, the private capital and alternative investments industry is seeing tailwinds. It might not seem like it, but it is. And that's because we are in a down market, and it's because things are going to start going back up. And in the market that we're priming this market for massive growth. You can see it. And over the next 5 to 10 years, especially from retail investors, you're going to see this massive influx of capital into the private markets as they become more and more accessible to folks. I mean, we're still in the infancy stage of all of this. I mean, it all started with the Jobs Act of 2012, when we kind of got out of the country club deals where you had to know somebody to be able to invest in the private markets. 2012 Job Acts changed that, allowed people to solicit and advertise for deals, and it really just changed the game. And then you saw it kind of peak in maybe 2020 to 2022, somewhere in that, and then you saw the interest rates kind of take that back down. But you will see people really start getting educated and want access to the private markets. But here's the reality check, right? So raising $10 million, for example, is just really hard to do. And if you're working, especially with retail investors, one by one, you might need to talk to 100 or more of them just to fill a $10 million raise. And let's call it for example, a 20% close rate. That means hundreds of conversations, follow-ups, a massive amount of admin work just to get across the finish line for that raise. And that makes scaling, as we know, as entrepreneurs, very difficult. And it's exhausting, and you get burnout. And that's why so many sponsors can't scale. Not because they can't find deals, which you will hear that from time to time, but it's really because they can't raise enough equity and they can't do it fast enough to close those deals, or they don't have the confidence to move forward with their deals because they don't know if they can raise that capital. So what do most sponsors do when raising from retail investors gets too painful? They either go to institutions or they bring in co-GPs. At least the old model was that way, right? But both of these come with their own challenges. Institutions usually want long timelines, big minimums, and lots of safeguards and control. And if they back out at the last minute, which I've seen dozens of times, your whole deal can collapse because you were depending on them for your entire equity stack, and it turns into just an absolute scramble, or you just lose that escrow deposit, and it's painful. Co-GPs can be just as messy. Big compliance risk there that we already talked about. Crowded cap tables, loss of control over your own deal, partnering with people, bringing them into your LLC that you really don't even know, which is scary, and it's it's not a good way to go. People think that they're just bringing in people into their LLC and it's not a big deal. Well, now they are part of your company. They are your partner in that company. And if they do something stupid or they commit fraud or they don't treat their investors the right way, that's the same thing as you doing that to their investors. So none of this is scalable and none of it gives your investors a consistent professional experience. And that's why the industry has moved toward a better solution and one that lets you raise more capital, stay compliant, and keep all the control on your deal. Lost my spot here. Where are we at? And the answer, of course, is fund to funds. So building and actually it's expanding those fund to funds. So it's building a stable of reliable capital raising partners to run those fund to funds. And here's the problem that we're solving. There's this invisible wall between your lead sponsor entity and all the millions of passive investors out there that we want access to. On one side, you've got the GP syndicator yourself. That's you and your team managing the deal. And then on the other side, you've got your network of LP investors you want to bring in, but they don't know you and they don't know about you. So if you try to raise too much through co-GP partners, you run into compliance concerns or you burn yourself out trying to manage dozens or hundreds of small investors. And if you try, but, and again, those compliance issues that we talked about before, but by using an SPV fund to fund, you can compliantly fund your deal and more efficiently and access those limited partners, those networks of those capital raisers. Unlike the usual suspects, fund managers aren't typically career capital raisers. They might be, but typically they are not. They're professionals in other fields who already know you. They've invested in your prior deals. They bring something that's priceless and it's earned and it's trust. Those people that are in their networks, they trust them, and that's what they bring to your deal. And their superpower, it's a natural, organic network built over a lifetime of a relationship. And now they're looking on ways at ways to scale as well. Now, here's why a lot of emerging capital raisers haven't used the fund of funds in the past. The old way was expensive, time consuming, and really pretty damn hard to put together. You'd spend a lot of money, $20,000, $20 to $25,000 just to get started with legal, weeks to set up, and you had to raise $5 million just to get the economics to work if you wanted to make this turnkey and hire a fund administrator. I know for my legal clients in the past, they've asked about fund administration and when it starts to make sense. And it doesn't make sense until you raise like $5 million, $6 million, $7 million, because they take a huge portion of your cash flow through their equity under management fees. And that's why we've set out to completely change this model to make it faster, to make it easier, to make it profitable for even smaller raises. So, and advantages in technology and investing in infrastructure over the last couple of years have really unlocked this brand new channel of capital partners that didn't even exist 2 years ago. They're called fund managers, and we like to call them independent capital aggregators or ICAs. So you'll hear us use that term from time to time. And we've just changed the game. Instead of 25,000 in startup costs, it's just five. Instead of hundreds of hours of building out the back office yourself, it's done for you. From banking compliance to ongoing administration, it's soup to nuts. It's everything. And instead of needing to raise $5 to $7 million to make it worthwhile, the economics can work with as little as a $500,000 capital raise. Plus, we have our fund ready in as little as 5 business days, not 2 months, which means you can strike a deal while it's hot and while your investors are ready. And that's the key is when your investors are ready to invest, they're ready to invest now. And if they don't invest with you, they're going to invest with somebody else. And the best part, the SPV manager can compliantly earn on average around $100,000 just for organizing and administrating a $1 million fund. And here's where it gets really powerful. So once you have the structure in place, every one of your LPs can become a fund manager. That's why our lead sponsor partners are working with hundreds of ICAs right now, and they're raising millions from this new channel. They're tapping into their passive investor network, showing them how easy it is to put a fund to fund together, and then being able to access that network of those passive investors and turning them into their fund managers. So you open up your capital stack, diversify like the best in the business, in turn scrambling from capital into consistently being fully funded. And a little bit more depth here. So, turning your LPs into fund managers, this concept is relatively new, and we're really pushing it because we're seeing so much success out there with our partners. And now that we've ran the play dozens of times, here's what we've seen. And we hosted an entire webinar about this topic last month. But simply put, you identify great fund manager candidates from your passive investor pool. You create demand through education and marketing, just like you would with your passive investors and trying to get that $50,000 check for your deal. You show them a clear path to wealth and building a business, and we'll help you build that and tell that story. And then you build a repeatable system for fund manager success. Show them how they can do this over and over again for each one of your deals and double and even triple their returns. Now that you understand more about the opportunity, really want to share with you very quickly a little bit about Tribevest's newest innovation, and we call it Trident. So we took everything we've learned from building hundreds of SPV fund of funds, and we built a platform to make it even easier. So Trident is designed specifically for ICAs to manage their capital raises all in one place, and for lead sponsors to launch, manage, and track their fund-to-fund capital raising program. It takes the process we just walked through and it automates it, puts it on a platform so that you can scale your capital raising without spreadsheets. There are a ton of new features, and afterwards you can watch a full demo, but I want to highlight two key features just to give you a sneak peek here. So first, this is a screenshot of the new software. Trident allows you to preset your recommended SPV terms. So this is from the lead sponsor's perspective, where instead of putting together a PDF or putting in an Excel sheet, you can actually configure your recommended terms for your fund-to-fund managers for their deal here, and show them how they can get paid and how it can work all the way down to their passive investors. Next, you invite your fund managers directly to the platform and directly to your deal so that they can launch their own offering. So they get invited to Trident, and then they launch their deal, their capital raise for your deal. Secondly, Trident allows you to literally see inside of all of your fund managers' pipelines so that you have better tracking and can better understand how much capital is in the pipeline and how much capital is actually in the bank. Now, there's going to be toggles and there's going to be permissions, obviously, between the fund manager and the lead sponsor as to what the lead sponsor can see. We understand that privacy concern. But if you as the lead sponsor have that conversation with them and say, hey, look, I'd really like to be able to see, how much you've got committed, how much you've raised so that I can keep track and see if I need to make other plans to get my capital stack build, they can certainly understand that. But that's just a quick snapshot of what's to come. And you can see how this will enable you as a lead sponsor to easily launch, manage, and track your fund-to-fund capital raisers to fully fund all of your deals. And here's what it looks like when you put it all together. We help you qualify your fund managers up front, build out your ICA funnel, and create a clear economic model so everyone understands how they get paid. Then we handle the deal intake, the SPV setup, the investor onboarding even for all of the fund managers, passive investors, so that the funds are wired quickly and cleanly. The result, you can run this process on repeat, deal after deal, with a clean cap table, professional investor experience, consistent investor experience, and full compliance. And this is how you scale your capital raising business and stay ahead of the industry. So what do you actually get when you partner with us as a lead sponsor? You get a done-for-you fund-to-funds program, just like it was just outlined in the last slide. We handle the structure, the economics, the execution. You get a priority setup, so your SPVs are ready fast. Again, 5 to 7 business days, and you get early access to Trident. It's the only platform built to manage and empower fund managers at scale. And the best part, it's free to you as the lead sponsor. We monetize at the fund manager level, so you get all of these benefits. You get the done for you program without taking a hit to your cash flow or your economics. And for the fund managers, here's what they get at Tribevest. We handle the entity formation, the offering documents, the banking, investor onboarding, ongoing services and administration, and even dissolution when this thing starts to wrap up. So it's really just soup to nuts, turnkey, compliant, scalable fund-to-fund solution from start to finish. It takes all the messy stuff, puts it all together into one clean package. Setup takes 5 to 7 business days, and they get a dedicated client success team, distributions, accounting, K1s, everything is handled for them. The result is a professional, frictionless experience for the fund managers, for their investors. And that's so that they could focus on the relationships and raising capital, not managing and administration. And quickly, we'll roll through some real life success stories here from some of our lead sponsor partners. And you guys know who these folks are. Lone Star Capital, they've done 5 deals with us and counting. 16 fund managers, $9.5 million raised. Viking Capital, 4 deals, 6 fund managers, 12 fund of funds, over $9 million raised. And recently launched a new cohort. They have a special program where they onboarded 13 new fund managers, and their goal is to raise 10 to 25 million just from this group alone. So you can start your own program just like Viking did and really, really lean into this. And you can see where it also works outside of real estate. It's not just real estate. It can work in private equity. It can work in oil and gas. It can even work for hedge funds. It can work for just about anything that you're trying to raise capital for. Aspen Funds is a prime example of that. They've done 5 deals with us, 33 million or 33 fund managers, 19.8, almost $20 million raised. So they've been an incredible partner. All right, let's jump into any questions that people might have to wrap this thing up.
All right, very good, Seth. I think some great information. Seth, do you want to go to the final slide where they can do some next
Yep,
steps?
let's do it.
Perfect. Cool. Awesome. Yeah, we put the link in the chat. Feel free to schedule a call with Cam and he can get you guys going. Um, we have a good question here from Douglas. How do you handle the distributions to LPs on behalf of the fund-to-fund managers? How does that process work?
So it's managed on the platform, just like an investor portal would be, right? So it's set up, your cap table is set up, your equity percentage for all your investors are set up. And you can, as the fund manager, you can actually get on your platform and you can make distributions yourself. So once that distribution is received, let's say from the lead sponsor into the fund to fund bank account, you can get on our platform and send out the distribution yourself if you'd like to, or it can be managed by us and you can say, we want you to manage our distributions. So when a distribution comes in from the lead sponsor, we will actually do the distributions to your members, your investors, based on that cap table for you. So you don't even need to get on the platform at all.
Perfect. Awesome. Let's see here. Juan has a good question. Does this service slash platform work for non-US based investors?
So it's limited right now. We are working on, we have a partner who everybody knows called Stripe, and Stripe is kind of this intermediary for funds, and they don't accept funds from foreign bank accounts right now. We are working on it with them to try to figure that limitation out. So I think in the future we will be able to do it, but for now, yes, we can accept foreign investors, but it has to come from a U.S. bank account. So that foreign investor would have to open a U.S. bank account either in their name or their LLC's name, which sometimes is hard, sometimes not, depending on what country you're in. And if that's the case, then we can accept them.
Perfect. Let's see here. So Douglas's question is like, he's kind of saying like, is it an investor portal? I think that like an investor portal is like part of what you guys do, but I think there's a little bit more. If you can kind of maybe dive into that a little bit more of like kind of what are the different pieces of what Tribevest does, Seth?
Yeah, and that's a big confusing thing that's in the market is I think that people lump Tribevest in with investor portal. So they lump them in with or lump us in with InvestNext and Syndication Pro and Juniper Square and all the investor portals out there, but we are not just an investor portal. I would say the investor portal piece is one of the smallest pieces of value that we bring. So it's not just the investor portal, which we do provide, but it's also fund administration, it's setup, it's banking, it's onboarding your investors. It's everything. It's compliance. It's legal. It's everything that you can need that you would have to get piece by piece to set up a fund of fund or to set up if you're a lead sponsor, it'd be a syndication, but here's a fund of fund. We do it for you. So all you have to do is manage your relationships with your investors, meaning keep that conversation going, and then give us that list of investors, and we handle everything for you, onboarding them, getting them to sign the documents, wire the funds, all those things. It's everything, not just an investor portal.
Perfect. Yeah, I think that's a good answer. Good question. Kind of common misconception.
Yeah.
I think that Alan has a question. I think we had an earlier slide where we showed the four capital raisers. What exactly, Alan, could you maybe clarify exactly what you're looking to see? Um, because like I assume, sorry, Seth, how it works is you'll build out your thing and then you can like invite fund managers to collaborate within Trident. Like, how does that look? I think maybe slide like 20 something, like 22 or something. Yeah, like one of these. Yeah, like that one. Yeah.
Like one of these two here.
Yeah. Yeah.
Okay, so what's the question here? So yeah, so as a lead sponsor, you would actually build your deal. So you would build your deal just like you would on an investor portal, right? You build your deal, you put in your parameters, put in the photos, put in your projected returns, put in your description, drop your documents in there, all the things you would do on an investor portal. You build that deal page. But in addition to that, on Trident, you're going to be able to build the fund of fund recommended deal terms, meaning these are the terms that you recommend that your fund of fund managers offer their investors. So that's kind of what we're looking at here. These are kind of the recommended terms and the projected returns for their investors based on those recommended terms. And then you can actually just invite them right on the platform to come into your deal and raise capital for you. So you just put in their email, they get sent a link to that deal page, and they get to say, "Yes, I would love to raise capital for you. I want to raise 500,000 bucks, or I want to raise 5 million bucks for you." They get these invites, and then you can see the different stages that they're in this screenshot where you've invited four capital raisers, four potential fund managers to the platform to see your deal, and they can say yes, they can say no. Here, all these folks have said yes, and you can see that the different deal stages that they're at, how much they committed to raise capital for you, how much they've raised, how the investment deadline, and you can keep this scoreboard and to see where you're at as a lead sponsor to see, hey, maybe I need to invite two or three more capital raisers to raise capital for me because it looks like we're going to come up short, or maybe I need to press go on the next email to my investor list because it looks like we're going to be a couple $100,000 short. It really gives you an opportunity for visibility into your capital raise so that you can make sure that you're fully funded.
Perfect. Good question here from Sh Shilon. Being that the SPV invests as one limited partner, how are like non-accredited investors calculated for a 506B deal?
So I usually like to punt this a little bit because it depends on your securities attorney's opinion. If you, from the lead sponsor's perspective, your securities attorney that puts together your deal will have one of two opinions. One opinion is going to be that each passive investor at the fund to fund level, let's say, each individual passive investor at the fund to fund level counts against your 35 for a 506B deal. So if the fund to fund that you're bringing in has 10 individual passive investors that are not accredited, then that 10 counts against your 35 at the lead sponsor level. The second way would be to just say, well, that fund to fund LLC is just one passive investor. And even though there's 10 individuals in that LLC that are not accredited, we're only going to count that as one against our 35 at the lead sponsor level. That's a more aggressive approach, and it really just depends on your appetite for risk at the lead sponsor level.
Perfect. Let's see here. When is Trident going live, Seth? Do you know? Do you have an approximate date?
It will be released in October. That's the goal. It'll probably be towards the end of October. And it's going to be released in stages. I want to say that just to set expectations. This thing is going to be awesome. We did a demo yesterday. It's going to be incredible. But we're only going to release phase one in October, which is going to be kind of this passive investor flow, I like to call it. So onboarding your passive investors and bringing them onto the platform. They're able to electronically sign and look at their documents and do all those sorts of things. And you can manage your investors on the platform as the fund manager. And then that will be done in October. The following month, we'll have the fund manager flow done, meaning you'll be able to track all of your deals and all of your investments and build your deal on the platform. And then the third phase, which will be the following month, probably December or early January, you'll be able to see kind of what you see here from the lead sponsor level, where the lead sponsor can build their deal and invite fund managers onto the platform.
Perfect. Good question here is I'm going to combine a couple. Can you do NDAs on the platform, like, have that in your documents? And then can you set up like blocker corps to avoid like ECI for non-US investors?
So our templated documents that we offer, so our offering documents, our PPM operating agreement and subscription agreement already have confidentiality provisions built in. Um, as far as the ability to, let's say, have an ancillary document like a confidentiality agreement or anything else, um, to be determined. I would say probably not from the phase one release, but later down the line, you'd be able to have ancillary documents such as like, I'm thinking about like an amendment to the OA or an amendment or a supplement to the PPM or even an NDA. If you wanted to include an additional NDA of your own, you could upload that to the portal and then be able to send that out to your investors.
Perfect.
I think I missed the second part. What was the second question
Yeah, no
again?
worries. I kind of combined two questions
Yeah.
that were not related. I like to do that occasionally, my fault. Um, will this platform eliminate the need for using like a DocuSign? I assume like, signing is included in the platform. How does that work, Seth?
Yes, it will. It will.
Perfect. Awesome. And then can you set up like I'm not sure what this is, a blocker corporation to avoid ECI for non-US investors? Are you familiar with that, Seth?
I am familiar with it. It's not something we would be able to do we like to call it our box, meaning like, we want to deliver a done for you all-inclusive product and make it just super simple, super easy and affordable. Something like that would not be included in that. But for any of these kind of exceptions, we like to call them account management exceptions. I have my own boutique law firm that can handle things like that. Like if you want to make a more intricate structure for your organization, we can handle that, but it would be outside of Tribevest, or you can get another attorney to structure it how you want, and then work with us to make sure that it fits within our product.
Perfect. Douglas's question. So I think he's trying to clarify basically the decision of whether the fund to fund is one non-accredited LP or like each non-accredited is counted. That's based on the SEC attorney of the lead sponsor, right, Seth? Is that what you were saying?
That's correct. Yeah. So like at the fund manager level, if you have a 506B deal, 506B fund to fund, just to be clear here, you're limited to 35 non-accredited sophisticated investors. And then the question is, well, do those 35, let's say you fill it up, do those 35 count as 35 against the lead sponsor's deal, or do they count as one just because of one LLC? Yes, that is up to the securities attorney of the lead sponsor, whether they want to count your fund to fund LLC as one or as 35 against their 35 at the lead sponsor level. And you'll hear differing opinions on that. Sometimes you'll hear black and white, like, yes, it's okay. We count it as one, or no, it's not. We count it as however many people are in that fund to fund. Or you'll hear there might be kind of a limit. So they'll say if that entity makes up more than 10% or 20% of your equity stack, then you have to what we call a look through. You have to look through into that next level LLC, that fund to fund, to see how many passive investors are in there. So it is totally up to the securities attorney and kind of your lead sponsor's risk appetite.
Alan has a question. I think this is already answered, but I think it might be good to clarify. Can the ICAs direct their investors to the portal and then the ICA gets credit for it? I assume that's how it works. Like the ICA sets up their portal, they direct their investors to it, and then they get credit for setting it up as part of their fund to fund. Is that how it works?
So they direct their investors to the portal. Yes. So, and we don't have screenshots of that right here, but it looks a lot like this, right? So, like your ICA or you as the ICA would you would do something very similar to this. So this is the lead sponsor view. But if you're the ICA, you would set up your deal on here, your fund to fund deal, and it would look a lot like this. And then you would invite your investors instead of invite ICAs, it would say invite investors, and you would invite your investors here and then they would all show up similarly to how fund managers show up in this screen. Your investors are going to show up here, and they're going to commit to soft commit to this amount. You can see the different stages they're in. You can see if they've signed their documents, wired their funds, done their KYC, got their accredited investor letter to you. All those things will be tracked on the platform.
Perfect. Let's see here. When Trident goes online, will that affect the cost of creating SPV? Will it increase the cost of creating SPV?
At launch, it should not. But we're constantly kind of evaluating the market, seeing where we fit in that market, compare us against, investor portals, against securities attorneys, all the different fund administrators, all the different services that we bundle into one. We kind of take a broad look at the market and see where we fit cost wise and make sure that it's a no-brainer. So it's always going to be a no-brainer cost. Like that's big for us. It's like right now it's $5,000 to set up. I mean, you can't get a securities attorney, a CPA, fund administrator, and hire an onboarding specialist or investor relations person for $5,000. It's literally impossible. So there could be some changes, but right now we're not planning on changing it. It's going to be just part of the package.
Cool. Awesome. I think final couple questions here. Liability wise, if I am an ICA and the lead sponsor does not perform, do you know how that works, like how that's treated and stuff?
Well, I think people have a misconception that if a deal goes bad, that you're going to get sued. Or if a deal goes bad, then even the investors have a right to make a claim against you as the fund manager or as the syndicator, but that's not the case. That's why you have a PPM. That's why your investors sign documents. That's why there's disclosures and disclaimers. It's because these things are risky. We know that. We're in this industry. Like we've seen it. A lot of these deals go bad. But so long as there's no wrongdoing, as long as there's no as long as there's full transparency, there's no fraud, there's no deception, there's no Ponzi schemes, it's okay to raise capital and the deal just doesn't go well. Um, Now, as far as the lead sponsor actually doing something and then you getting in trouble or your investors suing to get in trouble for it, you have your own fund. So as long as you're doing things right, you should be okay. Not to say, we're in a litigious society, so people get sued for everything all the time. I'm not telling you you're not going to get pulled into something. But, at the end of the day, if you raise capital compliantly, you do it the right way, you're not committing fraud or misrepresenting or misusing funds, then, you should feel confident in your capital raise.
Perfect. Cool. I think that's everything. I'll give you guys a few more questions as usual. Always some good detailed questions, Seth. We always
I think, hey Rohan, I
go
think
for it.
Benjamin had one. Do you
Oh,
do anything on the investment side for the lead sponsor that's making the investments?
do you know what exactly that means,
I think he's
Benjamin?
asking like if we help with like setup and of their like target deal.
Gotcha. So from the lead sponsor, we don't. And that's kind of our entry into the market and our place in the market is that we live for the ICAs and the passive investors and the fund managers, whatever you want to call them. We are working for you, and that's what our system and Trident is built for. Now, obviously, lead sponsors are a big part of that, but lead sponsors have their own securities attorney, they have their own portal, and we're not trying to take them away from that. You guys can use whatever portal you want to host your deal. You can get your own securities attorney to write your documents. And then at the fund to fund level, that's where Tribevest comes in. That's where we draft the offering documents for your fund managers. And we have the portal for them to use, as well as the fund administration setup and onboarding. But I will say, if you do need help with that, again, I have my own securities law firm that handles those sorts of things. And we've seen in the past that I handle a lot of target deals for people, and it makes it a lot more synergistic relationship with Tribevest because I structure the target deal in a way that enables Tribevest to work effectively.
Perfect. Cool. I think that's good. If you guys have any other questions, like details and specifics, again, like obviously this is a, a detailed business, so it's good to schedule a call. I think Cam can do a lot of good questions and answer for you guys. I think that if any of you on this call are lead sponsors looking to raise capital, I'm pretty well connected in the space, and a lot of people are doing this, and they're seeing a lot of success with this. So I think it's a very good additional way to raise capital to add additional capabilities to your capital stack. So there's no cost to you. There's no pressure to book a call, but I think that it'll really help you guys scale your business in the future. Anything else, Seth?
I think that wraps it up, man. Really appreciate it. Thanks everyone for coming.
Cool. Awesome. Thanks, everyone. Replay should go out in a couple days, and we'll look forward to seeing you guys in the next one.
All right, y'all. See ya.